Good morning. Good morning. Good afternoon. Good evening for those of you where it's nighttime. Well, how's everyone doing? Another all-time high in Globex. Just shy of 7,500 by 3 ticks. So we're kind of mucking around. We've corrected inventory. Inventory is long. Let me show you. So there's the inventory at the end of the day, okay? And we sold it overnight quite nicely, all the way up to almost 7,500. And now inventory is probably what, 90% long? And the way you can figure that out is you just look at the volume above the close versus volume below the close. Really simple. That's it. That's all it is. So we got long inventory. A correction is to come down and tag the close, and then to take out that overnight low. There's a lot of inventory up here. I'd say a lot of this is short covering when we took yesterday's high. We have visible short positions here and here. We have a short position here as well, and I'll tell you why when we get to the next chart. Basically, at every half hour candle on the bottom, these are the freshest shorts. So these are the earlier short positions, and then as you go higher, these are the later ones. That's why the market is 74.81 bid right now, right? So what we're trying to do, we're trying to navigate this market. And we're in uncharted waters because this thing's never traded up here before. So shorting that inventory correction was a good idea. You know, here's our levels. You know, we had a seller at 74.89 and a quarter all morning, and then we finally looked above, and then really looked above. And so had you shorted that 74.95, 7,500 stop, now it's a bigger stop, of course. Cover a little bit at VWAP. Now let's see, we're in this is the balance area, right? Which is basically what we call, this is the cost basis of the overnight. This is 2 times profit, this is 4 times profit. So we're still in 2 times profit. I'm looking to see if we can get down to the 74.79. And one of the things I'm curious about is, do we open with a gap and fill it, or do we open inside yesterday's range? Personally, I would prefer if we open inside yesterday's range and liquidate down. That would be healthy. But when we're doing so, we are going to need to find the bid, okay? We're going to need to find that bid. All right? And that is going to be essential. The bid is where the large short sellers are going to come in and start buying to cover. Okay? Welcome to the folks on YouTube. Good to have you with us. Happy Thursday. Now let's see what kind of customers come in. You can see that already, if you're looking at a 1-minute candle chart, you can clearly see the market is in a bit of a chop zone here, right? It extends down and pops back up. And it's done that 3 times now, right? Inventory is long, which means supply is above us. But every time we dip under that previous day high, let's call it 84, it seems to bid, right? So it's not really showing its hand just yet before the open, right? It's not really showing its hand yet. So let's see what we get. Now sometimes, and we saw this yesterday, I think, when the market opened, dropped down, flushed people out, and then just ripped. That is a scenario that I'm looking at today. We get an inventory correction. We come underneath the previous day high, come down and correct inventory a little bit, go sideways here, right? The cost basis of yesterday is here. Tonight's cost basis is up here. If we sell it down here and correct inventory, go sideways, look for that move up again, okay? The reason is you can already see it's done a look below and fail of the previous day high already. So inventory is long, it has just corrected. Now it hasn't corrected in any kind of a meaningful way, but nonetheless it's corrected, right? So what am I looking at? What are we looking at for trades off the open, right? If we stay above VWAP and when we open on a gap, look for sellers at 89 and a quarter. They were there all morning. They'll be there again, right? We have 3 sets of singles from yesterday. You're right, Jam. There's 1, 2. Where's the third set? What am I missing? There's a set here. There's a set here. G was. Oh, crap! Look at that. There's 2 single prints right there, isn't there? You need to put your glasses on to see them, but they're there. Look at that right there. They're right there. How do you like them apples, eh? Ugh. There they are. And that's just underneath that HJ stop. Didn't even see that all morning. Didn't even see that. Guess I got to start wearing those glasses I bought. Okay, we got a seller at 87 and a quarter. All right. See, the problem is normal stuff just kind of stops happening at all-time highs. And it's the unpredictable order flow that gets you. That's why I tend to wait a little bit longer. Right? So now say you're short. Say you're short at 87, 86. If it can't get under VWAP, it's trying to tell you something. Know what I mean? What's it trying to tell you if it can't get under VWAP? It's trying to tell you they don't have to sell under VWAP. Hey, R. Croy, how you doing? Right? So as R. Croy told us at the beginning of this week, she's going to be picky about where you do business on the chart. And I suggest you follow her advice because it's probably one of the most intelligent statements I've heard since I've opened up this trading room 5-6 years ago. Right? Be picky about where you do business. There, so if you're short 86, 87, go put a little buy order here. Just underneath 84. Go 83 and a half bid. That bid is what, let's call that your lookout bid. You guys know what a lookout bid? A lookout bid is not your whole position. Say you're short 5 contracts at 86 or 87. You put an order to buy one contract at 83 and 3/4. And if that contract gets executed, then you can stay short. But if it gets down to say 83 and 3/4 and does not fill you, then you can always just take the offer and close out your trade. Here you go, your lookout bid got hit. Now your 82 and 3/4 bid, let's see it, boom, there you get hit. 82 half bids get hit. There's a stop at 82. So if we break that stop, your next bids are going to be in the 81s. And that is the ticket. Use your orders to tell you whether the trade is working. Okay? We are expecting a correction to overnight inventory. Okay? So now let's see if we open inside yesterday's range, or all of a sudden you're going to get a big lift. Let's see if people fall for it. So if you're short, say like I shorted 82 and a half, I'm trying to cover at 80 and 3/4. I covered one. I'm going to put my next order. Ooh, I went 80 and a half and they ran away from me. Right? So what I'm going to do is I'm just going to take the offer at 81 and a quarter. Right? So the trade worked, but I should have bought more. I should have closed it out. Right? Not quite quick enough. Right? Let's see if we open inside yesterday's range. I think we will. Right? So you use your trades, you use your fills or lack of fills to tell you whether or not the trade's working. If you're long, put some sell orders out. If you're short, put some buy orders out. If they get executed, you're golden. If they don't get executed, don't worry. Take the offer, hit the bid. There's always the next trade, right? So you give up a few ticks, not the end of the world. At least you put yourself in profit. Worst case scenario, you pay for your commission. That's why putting your stop at break even is the craziest thing I've ever heard of. Who wants to do business for break even? As soon as you're in profit, you should put your orders out. Now, 20 seconds left before the open. Let's see what this puppy does when we open up. Geez, yesterday's open was all the way down here. I gotta say I'm short biased, right? So there's the open. There's the previous day high, no gap. So if we get accepted above the previous day high, you're looking for 87 and a quarter. Short 87.42 covering. Got a couple of contracts left. Covering. Short 87. And I got 2 left. And I am flat. Right, I shorted around the point of control. quick fills. Now, let's see if we can hold 87 and a quarter. We know we've got that 89 and a quarter seller. Right there. If you are shorting this and it accepts over 89 and a quarter, just be careful, okay? Don't get carried away. Because what's going to happen is the people who are short under yesterday's high, if they didn't participate in Globex, they're going to come in and start participating now. And by participating, I don't mean selling, right? So there's that bid over 89 and a quarter. You know, let's see. You're going to have sellers up here, right? The sellers are going to be at the top of every candle on the way down, right? Looking to see if it bids 89 and a quarter. If it can't break 89 and a quarter, then that seller, right? That means that resistance is turned into support. Okay? You got to be careful when resistance turns into support. Give it some time. So if you're long, say 90, put a little offer out at 92. Let them take you, right? 92, 91 and 3/4. Get paid, my friends. Get paid, right? Couple of points here, a couple of points there. It adds up, right? Now let's see what the cat drags in. A market is very dangerous to short. In this case, it opened no gap, right? So when a market or if a market opens, goes down and fills the gap, and then all of a sudden all this buying comes in out of nowhere, watch out, because what it's done is it's flushed out the inventory, number one. Right? So number one is it's flushed out all of those longs that were looking for a free ride over 7,500. It's flushed them all out. And it's done another thing is it's trapped a whole bunch of new shorts, right? Unfortunately, people love to short in the hole, and they are the fuel that powers the market higher. Happens every time. Still a seller at 92.5. That's good, healthy. I think if we break 89, we'll come down and tickle VWAP again. But if we can't break 89 and a quarter, as the Penguin used to say, govern yourselves accordingly. Okay? The trades that we're talking about right now are not at an edge, so you have to be a little smarter than the average bear, okay? So if you're short 91, 91 and a quarter against that 92.5 as a stop, bid 89, bid 88.5, bid 88 and 3/4. Get filled, get paid, and here comes 87 and a quarter. So if you're short 90, 91, take a couple of points, right? Here comes VWAP. Do they front run? There you go. Look below and fill of 87 and a quarter. Right up to 89 again, where that seller is, and has been all morning. Map out where the sellers are, where they're possibly going to come in and sell again. This way you can manage your expectations and you can trade with some intelligence as opposed to just chasing things around, right? You don't want to be in that position. You just don't want to be chasing these markets around, trying to get a fill, trying to make money, these kinds of things. You know, right back up to 92. Choppy, right? How do you know where they're sellers? You just look to the left, and they're where at the top of these candles, that's where the sellers are going to be. Now you're asking me, JJ, how do you know this? Right? And if you've been with me, you'll see it over and over and over and over again. Right? I do have a setup to take backfills, but you got to be quick. Sometimes, Aaron, truth be told, I miss the trade, especially if I hesitate. When you're trying to buy the backfill, you got to be quick, right? So, see how, David, how I drew that white line? It hit that, and there's the seller. See? Oh, you got to watch the chart, my friend. Look here. There've been sellers at 89 all morning. See, look, boom, 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 boom. Look above and fill. A little, so you can see that, and you know they're going to be back. Oh, crap. No joy in Mudville for the shorts. Oh, God help us if we take this overnight high. Well, that escalated rather quickly, didn't it? Oh, this market's a dog's breakfast. Yeah. I think if we take the overnight high, the mystery's going to be solved. Man. Oh, damn. How many people do you think are trapped short under 91, under 89? Yeah, it's been a meat grinder for the shorts since the middle of April, right? Yeah, so David, you track the sellers. You track the sellers like you're a hunter and you're tracking people in the woods. Okay, so we stopped short of the overnight high. That's good. That's good. That's good. Right? See, unfortunately, market profile is not a popular charting method. The reason it's not a charting method that is popular is because the teaching in market profile, and I say this with all respect, market profile teachers never tell you straight goods what the hell's going on. They talk in all these roundabout terms. They never tell you why the trade is happening or the exact mechanics of it. So people look at it and they go, oh, it's going to take me 10 years to learn market profile. And then the software, there's only 2 or 3 companies that provide the software, right? And it's a pain in the ass to set it up, right? There you go. Who was that? Espil, right? I guess your mystery is solved. So what I'm looking at is 75.11.5 is the top of this zone, right? And then we've got some more levels for you, and it just gets crazy and crazy. I got to clean this up. But yeah, there we go. Now is this a look above and fail? Now we're going to backfill. Let's see where the bid is, right? Don't worry, Deuce. We'll help you with Sierra charts. There's a lot of people in the room, or you can just download my chart book, right? So, there's Sierra charts, and there's other people who have TPO software. There's other companies like Window Trader, which is easy to set up but ungodly expensive. I don't even know if they're still around. Is Window Trader still around? I know the principals are a little older, so they're in their 80s. So I don't know if they're still running the company. Nice people. It's ridiculously expensive though. It's like 20 times the cost of Sierra, right? Easily. It's like $500 a month. And you can't execute off of it, which is hard, right? So it's a very dark corner of the charting world. What I want to do is take market profile, take the important aspect. There's only really 3 important aspects of market profile. Teach you how to use that in a practical way, and then use the 1 minute chart to do your executions off of, because it's much more clear, right? Now market profile is handy because here you can see the overnight high is 74.99 and 3/4 or a quarter. If we stay above that, that means the shorts are being forced to come in and cover. When the shorts are forced to come in and cover, it provides price stability. And then other people will come in and join and buy to go long. Yeah, Peter does use Window Trader, but if you outfit a Window Trader with equities and futures and the data feeds, you're looking at like $500 a month. And the problem with it is Window Trader, every time the market opens at 9:30, it crashes because it can't handle the data stream. If they made it robust and dropped the price 95%, it'd be wonderful software. I tried to convince them to do a cheap, under $100 a month version. They wouldn't go for it. Right? And your data feed with them, unfortunately, is like so expensive because they have so little client base. With our data feeds, we're paying 30, $40 a month. With their data feeds, it's like a couple of hundred. Right? Okay, that one I've never heard of, right? So what we're trying to do is we're trying to teach people the mechanics of trading. And you don't really have to have market profile, right? You can use the concepts of market profile like poor high, poor low, single prints, and knowing where the inventory is. Now let's see if 7503 has any bearing on this. Where's the top of my zone? 75.11.5, which is just up here. Go draw a line. Oh, good, some liquidation. So another new all-time high. I've heard other companies like Quant Tower and this motive wave. You're the first person who's mentioned that place in a long time, right? So it is expensive. Oh, thanks, David. The beautiful thing about Sierra is it never crashes, which is just wonderful. It is a pain in the butt to set up. Look at, there's the point of control right above the overnight high. What does that mean? Size. That's all short covering. So now let's see if we can accept back underneath the overnight high. If you're brave and you're shorting this, right? Wait till it gets under the overnight high and use that 7500, 7501 as a stop, right? If we stay over the overnight high, watch your whiskers, all right? I've actually never seen the TradingView market profile. Do I ever look at the VIX? I always forget. Until somebody reminds me about it. I never look at the VIX. You know why? Because I can tell from the way a market's trading if the VIX is up or down. Right? What's it now? It's at 18, right? I, I pay like $100 and something for everything with Sierra. But I got equities and, the full meal deal, right? Come on, where are our sellers? Not yet, not yet. The higher this market goes, the more people short it. So there's always more people to come and buy it when it starts to drop. That is a problem. So say you're selling that overnight high. Say you're shorting, the 97s, the 98s, right? Your stop is just above the overnight high, right? There's no reason to be short if it doesn't, if it reclaims it, right? If you're shorting this backfill, you know, you short 97, where are you going to bid? Go bid 95 and 3/4, right? Short 97, had a 95 and 3/4 bid in, couldn't get filled, and I took the offer. Thank God I did. Otherwise, they would have just killed me, right? Got to be quick. Whew. That is what I mean by unpredictable order flow, because you don't know where that bid's going to come. Did anybody see that bid coming before it came? No. And if you just say yes, you're lying, right? Right? How many people did they trap on that move? Unbelievable. 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 Levels are working pretty good, eh? 75.03. They stepped in and started selling. Now we're going to move down to that 74.99 and a quarter area. And let's see if they bid it again. Trading all-time highs long or short is dangerous. Just make sure you really manage your risk, my friends. Really manage your risk, okay? If you're missing trades, don't feel bad. There are a lot of traders who are blowing up their accounts daily at these price levels. right? Don't worry about it. Things will start going sideways in a while. And I know I've been saying that for weeks, but eventually this market will start going sideways and the trades will get a little bit better. Okay? If it's moving too quick for you, don't worry, it'll slow down, right? Just relax and let the order flow come in. That 75.03 was nice. I did not take that short. Yeah, it's getting a little wonky here. Big red candle, right? Big red candle. Now let's see where they bid. As we creep up to that overnight high again, wait for it, right? Wait for it, wait for it. This kind of price action really gets people because what happens is now what we've done is anybody who bought this got flushed out. Let's see now if it holds these levels, right? Don't feel bad if you're not making money in this market, okay? Don't feel bad because what's going to happen is eventually we'll start going sideways, right? Or get a nice liquidation and go sideways. Now, what we had a liquidation, what, 2 days ago, 3 days ago? But it only held for a day, and all it did was trap more shorts, right? So let's see. There's a seller at 99.25, and then it'll be seller just over 7,500 if we can take it. Point of control moved underneath the overnight high. Interesting. So there's a good bit of business just under 98. This liquidation is healthy. 95.25 is the middle of the zone we're in now. And we trapped some inventory long above us. As we drop in, let's see where we find that bid. Let's look for bids at VWAP, right? Sellers are right there. Nice liquidation now to 91. Yeah, Nvidia is, it's one of those deals where, have you done any float analysis on Nvidia? You really want to go and check out the float on Nvidia. Watch out, we're getting a nice big green candle, but there's a seller just at 99 and a quarter. Thankfully for our friends who are short. Really unpredictable order flow here. Trust what the chart is telling you. Try not to overtrade this. It's very easy to overtrade these kinds of markets. Let the market find the bid. Okay, the reason why you want to do, especially with these big stocks, right? Let's go take a look at Nvidia. So there's float analysis, and there's also not only the float, but who owns the float and what kind of dough do they have, right? So if you look at Nvidia, the float is 23 billion shares. 70% of it is institutionally owned. It's owned by people who are trillion-dollar players. So they don't have to buy it on credit, they bought it for cash. Okay? Out of those 23 billion shares in the float, the thing trades 155 million shares a day. So less than 10% of the float trades on a daily basis. What does that tell you? Right? It tells you BlackRock's got 2 billion shares, Vanguard's got 1.5. They're not selling that, they're not trading that stock out, right? I don't need to have NVIDIA on the screen, Jam. I'm talking about the float, right? I'm talking about the float. I'm not looking at the chart. I'm talking about the float. I'm telling you guys that less than 1% of the stock trades on a daily basis. And you have high institutional ownership by investment money, right? Now, you don't need to look at the chart. You don't need to look at the chart to. You can kind of guess what the chart's going to look like, right, Jam? I mean, once you analyze who owns a stock and how much stock is out there, do you really need to even look at the chart? Right? Okay, we finally got a big liquidation. Now we're underneath that 89 and a quarter. We're underneath VWAP. So as the market comes up, to these levels, if we can't get up above VWAP, be careful on the longs, right? I'm long 89. I'm selling the 92s like I stole them. Okay? Long 89s. I'm selling these 92s like I stole the position. I'm selling 93. I got a little bit left. Selling 94. Got a little bit left. Right? Look below and fail of 74.87 and a quarter. That's why I didn't put the chart of NVIDIA on there, right? Got it? There you go, right? Look below and fail of 74.87 and a quarter. I bought the 89s when it got over 89. And I was out by 94. Okay? That's the trade I was wanting. There it happened. And that's why I didn't switch the chart, because I wanted to focus. I can talk about NVIDIA, and now let's go look at that NVIDIA chart. What a big surprise, right? So once you talk about it and you know who owns it, you can pretty much look at the chart and tell what's going on. Even before you look at the chart, you can kind of go, oh, it's a locked up float, right? And that's what I'm talking about, float analysis, right? That was a nice trade, folks. Look below and fail of 87 and a quarter, long 89, selling the 94s, 4 or 5 points on 5 to 10 contracts. I'm done for the day. Right? Yeah, that's what I was talking about, Jam. I was reading off of that. Also, Deuce, there's a video on why these markets never go down and stay down. Why they go down after a big liquidation and then pop back up and hit new highs. Right? I'll send you the video. Okay? That's why markets hit new highs after selling. And all of you guys should watch this, right? I explain and break down exactly. I just sent it to you. Yeah. It's also in the JJ video area, but it's not categorized in that area. Yeah. I've spent decades putting deals together and structuring companies. And this is why I'm going to be doing a course on investing as well. Because not everybody's a trader. Not everybody wants to sit in front of a screen and trade. Right? A lot of people just don't have the time for it. So how do you invest money in a company? How do you know what to look for? How do you know what to avoid? What information do you actually look at versus all the sea of information out there? How do you look at a company like someone who actually builds stocks for a living and builds companies, right? That's what I'm working on, right? How many monitors do I trade on? Well, I have 5 screens, right? I have 5 screens. I have my Discord on one. I've got crypto on one. I've got this one here, and then my execution screen is off to this side. Now, when I was making markets, I usually had 6 to 8 monitors because I had multiple stocks that I was controlling. Then after I thought, okay, I'll just go to 2, right? And I got to simplify. Went down to 2. And I just had 2 monitors for the longest time. But I live in this building in Liverpool where there's a lot of students. So what happens is a lot of these students from the Middle East, they go to school here, they buy these monitors, and then they give them to me when they leave. So I've ended up getting all these more monitors. So yeah. But you only need 1 or 2. You don't need 5. You don't need to have a huge setup. I know a guy who's a billionaire who trades off of one screen, right? So you don't really need you don't need, really need a lot. Morse code, right? Back in the day. So yeah, when I started, your level 2 screen was static. You had to keep hitting enter to refresh it. I remember we used to wear out keyboards. Yeah, well, ever since the invention of the LED, right? When I started, everybody still had green screens. Windows 95 really changed the world. And that's when screen-based trading started to kind of come alive. Before that was just quotrons, and before the internet you had to have a dedicated telephone line for your data, and it was thousands of dollars a month, right? Even when I started, we had something called Dow Jones Telrate, and it was 1,500 a month. And then if you had a Bloomberg, it was another like 4 or 5 grand a month, and you'd split that with your partner. So you were like, and if you had an assistant, you were like 10, 15 grand a month before you even made money. I mean, you gotta pay your assistants at least 5 grand a month. Most assistants won't work for less than 10K a month. I mean, if you're a broker or a trader, you're making 100, 200 grand a month. You gotta pay your assistants well. Okay, back down to liquidation. Good distribution here over 74.92. Yeah, like if I make markets and I work on one deal, all I need is just one screen, just one level 2 monitor so I can watch and babysit the market makers just to make sure they don't screw with my orders. That's all. It's choppy here, isn't it? Sellers at 99.25. They kind of stopped selling here, just at 92. Let's give it some time here. I know everybody's looking for that big short. And guess what? So does the market. The market knows that you guys all want a short, right? It can feel it. Oh boy. Yeah, exactly 10 after 10. In the old days, 10 minutes after, say 40 minutes into the trading session, this is when the coffee cart would come around and everyone would have a coffee. Because you get that burst of business and then it kind of slows down for a little bit. So you grab your coffee, kind of chill out, look and see whether your orders get matched. We used to have something called ACT. See if your market makers are coming out on ACT and matching your trades. You can see that even in this electronic environment, that still applies. I like to call this the algo smoke break. It's when the algos go for a cigarette. Now let's see what the next order of business is. Let's see if we can break this 92 half. There we go. Come on down. I'd love to see the market get underneath VWAP, get underneath 87, and go test the 79s. That would be nice. You know, a nice liquidation. But the thing is, there's so many buyers here at 92. See how the market hits those 92s and lifts? You guys see that? Right? You hit the 92 and lift. Boom, 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 boom. Right? And the seller's here. So right now they're running a box between 96 and 92. And they'll go like this until they wear out all the longs, trap enough shorts, and then boop, back up to 99. Right? Watch. Right? Unless the sellers get desperate at 98 and they'll push it back down. And it'll go back and forth until they have all your money and they have all your product. You know, Victor Niederhofer used to say it. When the market goes up, I take your money and I give you stock. When it goes back down, I take back the stock and I give you less money. At the end of the day, I have all your money and all your stock. And that's the business. Watch the offer. There's going to be a seller somewhere up here at 98 and a half. Ooh, 99. Didn't I tell you? The candle that you just saw is the shorts coming into cover. Right? Because when you do this washing machine back and forth, you flush out all these people, and then you trap a bunch of shorts here. When they go to cover, you lift the offer. It's only been doing this for thousands of years. This is nothing new. And this has nothing to do with algos. The algos just make the business more efficient. That's all it is. Okay? That's all they're doing. They're improving the efficiency of the trading and they're improving the efficiency of the product. The delivery of the product. That's all it is. It's just like automating your factory or how Amazon automates their warehouse. That's all technology does is make an existing business more efficient. It doesn't change the actual nature of the business because it's a market. And a market is based on accumulation of inventory. You have a cost basis, and you take it and sell it. Now it's back to chop at 99. And what you want to be careful of if you're shorting is you want to really be careful if we accept over that overnight high. And if we take out so there was a seller at 3.25. Will they be there again? Here we go. We're creeping above 7,500. You guys have any questions? You guys still awake? Hey Attila, if you're on the stream. Oh, good, you're there. I sent you a message. Check your DM. Creeping on that 3/4. Here we go. Poor high. Yeah, that's not crazy. There's a lot of hedge funds that get it wrong, you know? Just because you have a hedge fund. Here we go. And this is what we're trying to warn you about. They'll go away and come back, you know? So this is 4 times cost basis. And now, if you're wondering, we just do another 8. So it's 2, 4, 8. Not that complicated. 1, 2, 3, 4, 5, 6, 7, 8. There's your new target. And you just use the levels. Now, these levels have never been used and they've never been traded at. So just be careful, right? If we accept over 75.03, you're looking for 7.25. The fact that the top of this 4 times cost basis worked to the penny, that's a good sign. There's a look below and fail here, a look below and fail. Now you just wait for your trade to set up. Wait for your opportunity to present itself, right? Don't get sucked into this price action. It's so easy to get sucked into this price action, right? It's so easy. Don't fall for it. Looking for 7.25. There it is. We're off by a tick. Oh, there it is. 7.25. Keep going. What was the ultimate level here? Oh, it should be a quarter. We're pretty close. Told you guys about this level days ago. You know, and a lot of people go, well, JJ, you're a scalper. You know, there's really, I want big money. I want to make $200,000 a day, and these little scalps that you take, it's not enough for me. Well, here was the trade. If you want to make big money, there's the look below and fail of 73.91. What's the target? The target is all the way up here at 75.11. And we told people, you know, 2, 3 days ago, we told people if we look below 73.91 and come back up, the market's going to rotate all the way back up to 75.11. And we just hit 75.07. Right? So, you want those big trades? We got them. It's beneficial for you to learn how to do it on a 1 minute chart first. Build up your skill, your capital, your experience, your trade management. You also got to remember you got to put up a lot of money to hold these contracts overnight. But if you're trading hundreds of millions of dollars and you want that big, big dough, 73.91 to 75.11, and we called that out. Go look at my Twitter feed. I put that out a couple of days ago. I showed you guys yesterday where this thing was going, right? And we'll teach you how to trade it. You could trade it, jam trades with options. You can trade it with options, if you don't want to hold contracts overnight, you know. Yeah, when did I put that out? 21 hours ago, I told you where we were going to go. Can't beat that with a stick. Gem. Yeah, Gem. He trades this with options. So he'll go long in the options market. All you got to do is listen and learn. And have the discipline to have a good business plan and stick to it. And then also to have a business plan and manage your risk, right? So now when we liquidate, let's see if we get back to 3.25, right? Watch. There's 3.25. And if we break 3.25, you're looking for 74.99 quarter, right? So those of you who are short 75.06 against the eights, put your bids down here. There's going to be position here. So just watch out for that, right? The point of control is basically the cost basis. So if your point of control is here, David, let me show you. Right? So the point of control in the overnight is here. That's where 70% of the product is priced. Right? Now you take that and if you move the point of control up here, you see the difference between that is profit. That's all it is. That's all the point of control is. It's telling you if it moves up, you got good distribution. If it moves down, you're looking at liquidation. Okay? And if you don't know what liquidation and accumulation and distribution are, I think you're in my trading room, right? Please reach out to me and I can direct you to the videos that will explain this in great detail. Okay? I think I saw you in the trading room a couple of days ago. So after they solve for profit, we might be able to come down again because they'll put it on sale. Yeah. But the chart's going to tell you, right? See how we were looking for that 99 and a quarter and we haven't been able to hit it? Yes. Yeah. So what you should do, David, is direct message me, right? And I'll point you to the videos in the room where I talk about this in detail. And not only do I talk about it, but I tell you how we set up our business around these things, right? So this way you can actually make money from it because a lot of trading rooms and a lot of education and trading is just theory, right? It's theory, theory, theory. But how do we take that theory? How do we take the really important points and use it to make money, right? And how can we do it in a simple way where you don't have to spend 10 years learning chart patterns and candle patterns and these kinds of things? How can I start to make money or even have a chance of making money, right? How do I train myself to only take good business opportunities? How do I train myself to get out of bad trades automatically? How do I train myself not to trade when the business is bad for a retail trader? All of these things, right? All of these things we will teach you, right? I've got 400 videos on YouTube and I've got tons of videos in the room itself in the education library. Those of you who are in our room, please reach out because I'm telling you these markets are not going to get any easier to trade, right? They're going to get more and more demanding as we go into summer. It's going to be the next 2 years in this market are going to be difficult. And if you don't have the education and you don't have the training, you might as well just burn your money. And we will help you do it and we will charge you a fraction of what other people do. Right? Because we generally want to help people and we want to help people succeed and pay their bills. Right? We're not here to get you a Ferrari. Right? It's not like other trading rooms. Right? Right? We're here for regular people so they can learn a living. And if you want to go beyond that, I offer one-on-one mentoring for life. So when I take on a student, I work with them for as long as it takes to get profitable. So there's no time limit, right? And that's it for us today. Yeah, message me. We'll have a conversation. It's good to meet you. You ask a lot of good questions, right? David, you ask a lot of good questions. So I look forward to speaking to you. And that's it for me today, folks. Come check us out at thetradingsyndicate.org. Right, we will also have a competition starting in June where you can win $5,000, because we want to attract members. right? But it's not a, bang on your chest kind of trading room. The people in the room genuinely want to help each other, right? And that's why we keep the costs down so you can learn over time, okay? Thank you very much, everyone. Have a great trading day, right? Don't let them get you, okay? Stay on your toes. If you have questions, reach out. I'm always around. I appreciate all of you being with me today. Have a great afternoon. Don't take candy from strange market makers. And we'll see you bright and early tomorrow morning. Thanks, everyone. Bye for now.